So in the last 3 videos before this, I showed the result of how the analysis of the jump index market, that is the jump 25 and the jump 10 index market, played in the direction of our bias. Jump 25 index buying to the upside and jump 10 index selling to the downside. And on that video, we did a top-down analysis of the crash 500 index market, a top-down analysis of the crash 500 index market, speculating that price was going to sell from this very point to this downside and then eventually react to this upside, or price was going to buy to this upside and then eventually drop to the downside before we start searching out for entries. But as you can see, guys, price sold to the downside. Can you see from the point we marked out, price sold from this point to the downside and came into the zone we marked for our entry. And as you can see, price is buying to the upside. Can you see how accurate this analysis is? Can you see? Price got into the zone we marked out and there was a reaction which eventually is pushing price to the upside. As you can see, guys, this analysis is playing out fine. This analysis is playing out fine. That's not really what I have for you guys today. What I have for you guys today is trading on the 1 minute time frame. Trading on the 1 minute time frame. How you can use your trend line to spot entries and take entries on the 1 minute time frame. For those who have been utilizing the strategy I dropped as regards scalping on the 1 minute time frame in my previous videos, I know you can testify to the fact that this strategy has been working. It has been working. So guys, today we'll be doing a quick back test of that same strategy, and if eventually we see an entry, we'll be taking a live entry on my demo account. This is actually my demo account. We'll be test running the strategy on this demo account. So hopefully we see an entry on either the boom market or the crash market. Then we'll be taking a live entry. We'll be taking a live entry. So guys, can you see at this point the market has touched the trend line 3 times. So trying to draw another trend line might not really hold. Can you see the first touch, the second touch? Can you see the third touch? There was a spike to the upside. So quickly let's check on the crash 500 index market to see if there will be any possible entry. But as you can see at this point, this is already an entry. Can you see? It's already an entry. Can you see this is the first touch, break of structure, that is the break of this structure to the upside. Price dropped to the downside, touched the trend line for the second time, broke structure again, came down the third time, can you see? And can you see the eventual move to the upside? This strategy actually works, guys. This strategy works. For those who have been utilizing it, I know you can say of a truth that this strategy has been working. I showed you guys how you can use this strategy to scalp for spikes and also scalp for candles. Scalp for candles and also scalp for spikes. So quickly, let's go to the 1000 index to see if there'll be an entry. Can you see? This is an entry at this point, but we missed the move. We missed the move. Can you see? First touch, break of structure to the upside. Second touch, break of structure to the upside. Can you see the third touch? Can you see the move to the upside? Spike moved to the upside. Quickly, let's do a back test to see. This is for buy entries. This is for buy entries. Let me quickly highlight that for you guys to see. Okay. Quickly. Buy entries. Buy entries. Scalping for spikes you would want to buy, while scalping for few candles on boom index market you want to sell. Can you see? Can you look at this point? Let me quickly see if there's an entry at this point for a sell. For a sell, quickly, can you look at this point? It's actually an entry at this point, but it's not so clear because the second spike is not touching the trend line, so that will be invalidated. We'll be looking for a setup where the second spike is touching the trend line. Second spike is touching the trend line. Don't mark that zone out, waiting for a third touch. Can you see? Look at this point. This is a point for a buy. First touch, second touch, break of structure, break of this structure. Third touch, can you see the spike to the upside? Can you see the spike to the upside? So quickly, I will be looking out for points where the market sold, so that we can, I can show you guys how effective this strategy is. How effective this strategy. Let's quickly go back into history to see, to look out for entries. Look out for entries. So guys, this strategy actually works. This strategy works wonderfully well. As I said in the previous video, with this setup, you can see about 4 to 5 entries to scalp for sell candles in a day, and also 4 to 5 entries to buy for spikes on the boom index market per day. In total, you might be seeing about 10 trades per day. I know I've been scrolling through setups. Okay, let me just focus now and show you guys a few setup. And also on the crash index market, this strategy works. You just have to be patient to ensure that this strategy aligns, that all points are correlating with. Can you see, guys? Can you see? Let's zoom it in for you guys to see. Can you see? This is the first touch, break of structure to the downside. This move to the downside broke this structure at this point. Can you see the second touch? Can you see the third touch on the trend line? Can you see the sell to the downside? Can you see the sell to the downside? You would have scalped your 5 to 10 candles and you would have exited the market. I said 5 to 10 candles and then you exit the market. 5 to 10 candles and then you exit the market. Okay, let's go to the crash 1000 index to see, to look out for entries also. Can you see this point? This is actually a sell entry at this point. Can you see? Let's zoom it in for you guys to see. Can you see? This is the first touch, break of structure to the downside. Can you see the second touch? Can you see the third touch? The military price touched the trend line for the third time. Can you see the spike? Can you see the spike? This strategy is actually good for hunting for spikes. Guys. Quickly, let's continue with the back test. So if we see a live reason to enter the market, we'll be taking trades. If we see reasons to enter into the market. For me to show you guys how effective this strategy is. Okay, guys. Although this is already 3 touches have been completed on this trend line, but I won't be risking it. This is already the first touch. This is the second touch. This is the third touch. There's every possibility that price eventually touches the trend line and still buys to the upside, but I won't be risking it because our entry confirmations have already played out. So guys, now what do you look out for to exit the market if price does not buy to the upside? Because as I said in the previous video, no strategy is 100%. No matter how good it is, there's no strategy that is 100%. Every strategy has its downside. So what do you look out for to exit the market? On the boom 500 index and the boom 1000 index, what you look out for is 10 candles sell to the downside. 10 candles sell to the downside. Once you see that price has sold to the downside for 10 candles and the spike has not occurred, what you do is exit the market. Exit the market. For those who trade small accounts, 10 candles is enough for your stop loss. While for those who trade big account, uh, 15 to 20 candles is okay for your stop loss. 15 to 20 candles is okay for your stop loss. Or it depends on how much you want to risk. You might be handling a big account and you would want to just risk those 10 candles in the market. That is still fine. Can you see an entry at this point? That is still fine. Then just ensure 10 to 20 candles. You don't exceed 10 to 20 candles for your stop loss. Can you see? This is the first touch, second touch to the downside, second touch at this point, third touch. Can you see how far the market? So this already from this point to this point is 22 candles. So you would have gotten your 10 candles and you would have exited the market. 10 candles and you would have exited the market. Okay, let's look at what price will do at this point, because as I said, there's every tendency their price gets to this point and eventually buys to the upside. So quickly, we'll keep monitoring price reaction at this point. Keep monitoring price reaction at this point. So quickly, let's continue the back test. Let's continue the back test. And quickly, guys, let me just quickly say some few things before we go back to look at what price has done at that point. Now, many traders don't really understand the aspect of trading that is very, very, very vital, which is psychology. Psychology. Many traders don't really understand. Can you see first touch, second touch, third touch? Many traders don't really understand that the psychology behind trading is one of the most vital things that every trader needs to have in place before actually going into the market to pick trades. Before actually going into the market to pick trades, many traders just go into the market based on the fact that, oh, I have a good technical analysis strength. I can analyze the market technically. I can do my top-down analysis. I can do this. I can do that. Neglecting the fact that even though you are a good trader, you still have to put into consideration the psychology behind trading, the ability to hold trades, the ability to let your trades play out, the ability to know how to manage emotions while trading, while on a losing streak. Because there are times that you might just be on a losing streak, and it isn't because your strategy is bad or because you are a bad trader, but because the market is just doing its thing at that time. The market is just doing its thing at that time. So guys, can you see, if I continue what I'm saying, can you see this point? This is actually a failed trade. This is actually a failed trade. Can you see the first touch at this point? Can you see the second touch? Although price touched this candle 3 times, we won't be counting it as an entry. Can you see this third touch? The market didn't respond at the third touch. That's why I said risking those 10 candles. These are about 10 candles and then you are out of the market. If the market does not spike after 10 candles, exit the market. Exit the market. So guys, as I was saying, the psychology behind trading, understanding how to hold trades, understanding when to stay off the market. Being a good technical analyst doesn't imply that you are a profitable trader. I have so many people who come to me on the Telegram channel or on my Telegram page and tell me, oh, they did this analysis, they did this, they did that, and eventually price didn't respect their stop loss. Price didn't respect the zone of their stop loss. That means price tapped them out and eventually came in the direction or went in the direction of their buyers. And they begin to lament that, oh, I think trading is not for me, trading is not for me. And then I let them understand. Can you see? I think the price just spiked. Okay, it's a small spike to the upside. Can you see, guys? Can you see? Can you see that? It's every time they say this thing still buys to the upside, this price still spikes to the upside, or it continues to the downside. Well, can you see a reaction at that point? A reaction at that point. So they feel like, oh, I'm not a good trader. I lose money every time. I lose money every time, even with the fact that I am a good technical analyst. And then I begin to make them understand that it is not just about being. Can you see this spike just occurred again? I think spike just occurred again. Can you see, guys? Can you see? Can you see how effective this strategy is? Can you see how effective this strategy is? Just because price has touched this trend line 3 times, um, I didn't take the trade. Oh, it didn't even touch it the third time. Can you see? So this was actually an entry. This was an entry. I didn't really see this point. The price didn't really touch it. Let me zoom it in for you guys to see. I didn't really know. I didn't really see that price didn't touch this point. Would have entered from this point and caught this spike. So guys, can you see how effective this strategy is? This is a live trade, and you guys can see for yourself that this strategy works. Can you see that this strategy works? So I make them understand that it's not just about the fact that you can analyze the market from the top, that is from the higher time frame down to lower time frame. You also need to understand that having a good psychology in the market is basically one of the biggest things that every trader need. One of the biggest things every trader need. In as much as you can analyze the market, you still need mental strength to be able to stick to your bias, be able to stick to your bias. You see many traders after opening trades and the market is actually ranging in the zone of their stop loss, they begin to panic, and they begin to close out their positions. And then they eventually come back to the market and discover that price actually went their way. The price actually went their way, and then they begin to beat themselves up and be like, oh, I'm not a good trader. Oh, this, oh that, oh this, oh that. So guys, the psychology behind trading is one thing many traders need to have: the ability to hold trades, the ability to know where to stay out of the market, the ability to know when to stay out of the market. So guys, hopefully we'll be seeing another move, and then we'll be taking a live trade. But I don't want to really make this video too lengthy. I don't want to make this video lengthy. Can you see this point? Can you see? Let's take 5. Let's buy 1, 2, 3, 4, 5. So in as much as we are entering this market late, this is already 1, 2. Let me zoom it in for you guys to see. Can you see? This already 1, 2, 3, 4, 5. 5 candles to the upside would have gone out of the market. We are just entering this market late. I'm just trying to show you guys that this strategy works. So we'll be looking at holding the market for the next 5 candles again to see if our 10 candles bias will be it. If our 10 candles bias will be it. But as you can see, we are entering the market late, very late. So there might be a spike to the downside. But we're going to hold this market and see how it turns out. So guys, while the market playing out, let me just let me continue with what I was saying. So guys, trading psychology is everything. It's basically everything a trader needs. As I said, being a good technical analyst doesn't imply that you are a profitable trader. It doesn't mean that you are automatically a profitable trader. So guys, understand when to stay off the market, understand uh, consistency. Because one thing that many traders don't understand is consistency. Many traders don't know how to stick to their trading plan. They don't know how to stick to their trading plan. They stick with it. They stick with their trading plan for just a few days, and then eventually allow emotions get the better part of them, and then they begin to trade emotionally. As a trader, you mustn't be emotional about your trades. You mustn't be emotional about your trade. Once you've done your analysis, allow the market to play out. Once you've done your analysis, allow the market to play out. If you are risking 1% in the market to make 5%, or 1% to make 3%, and in a day you've decided that, okay, I'll be taking just 2 trades in a day. If you eventually take the first trade and your stop loss got it, don't fret, don't fret. You just be losing just 1% of your account, 1% of your account. But after taking the second trade, as you've said, you'll be taking 2 trades in a day. Your first trade, your stop loss got it. That means you've lost 1% of your account. That is, if peradventure the 2 trades actually hit TP, you would have made 6% of your account, 3%, 3%, 6%. Now, out of the 6%, your first trade, TP got it. That means you've lost 1%. You are just left with 5%. You are left with 5%. If the second trade eventually comes your way, you will be making you would have made 2% for that day. You get that? You would have made 2% for that day, and that is actually a good side of profit. Making 2% on your account is actually very, very high. It's very, very high. There are investment platforms that don't offer more than 9% in a year. There are investment platforms that don't offer more than 12% in a year. So making 2% on your account size in a day is something very, very huge. It's something very, very huge. So guys, can you see first touch, second touch, third touch, then push to the downside? Can you see? Let's quickly check our move if it is going. Can you see? Let's zoom it in for you guys to see. 1, 2, 3, 4, 5, 6, 7, 8, 9. This is the 9th candle. We'll be waiting for the 10th candle to close, and then we'll exit the market. We'll exit the market. So guys, can you see? If we had entered from this point, from the touch, you'd have caught all these candles, and you would have left the market with your profit. So quickly, let's take boom, 500 also. Can you see the spike? Can you see the spike again? Can you see, oh, we missed this move. We would have entered at this point and caught all this spike to the upside. Let's see, this is about how many pips? This is already 14 pips to the upside. Let me measure it well for you guys to see. This is about 14 pips to the upside. 14 pips to the upside. Let me see on boom. Okay, on crash 1000, this is about, from a point of entry, this is about 20 pips to the upside on crash 1000. Can you see? This already 1, 2, 3, 4, 5. 5 candles complete. 5 candles complete. You'd have left the market in good profit. 1, 2, 3, 4, 5, 6, 7, 8, 9. We'll wait for this candle to close and we're out. Can you see? The candle just closed. So let's exit the market. So guys, can you see? Using the smallest lot size, this is the profit we've made. Can you see? Using the smallest lot size, that's about $2.3. If you are trading a $10 account, that's already $12 plus in your account, and that is actually a good place to start from in a day. It's a good place to start from in a day. So guys, making at least 2% on your account, and as I said, this strategy can play out about 5 to 10 times in a day on all the boom and crash commodities. All the boom and crash commodities. Now imagine taking all these entries in a day. You'll be in good profit. You'll be in good profit. So guys, that's how the strategy was. Can you see that we took live trades, we took live analysis, and they all played out well. In the days where the market might not really go your way, what you need to do is ensure that you go out of the market after 10 candles. After 10 candles, can you see? So risking 10 candles in the market to catch a spike. If it does not go your way, you will just be losing about $1 or 1 point something dollar on a $10 account using the smallest lot size. So guys, that's how the strategy works. You can see for yourself that this actually works. So if you're just coming across my YouTube channel for the first time, I would like you to click on the subscribe button and also turn on the notification bell so that whenever I post a new video, you guys will be notified. And also do all to smash the like button, do all to drop a comment in the comment section, and also do all to share my videos, my link with your friends and family. Let them know that something amazing is happening on my YouTube channel, Perfect Forex. Until I come your way again, this is Perfect Forex, your friend, your brother, your favorite trader. Do have a great day, and God bless.